Yo, what's good, YouTube? Today I'm gonna be showing you guys how to chart and how to do technical analysis in the stock market. I'm gonna be showing you guys what I do, what I look for to be a consistent trader, and have consistent profits over time. I'm going to show you, and I know that's a big question if someone's new getting into trading. The main thing that when I was starting out, the main thing that I had questions about: when do you actually enter the trade? The things to look for when you're actually trying to enter the trade. These are the questions that I had, and I'm going to answer it right here in this video. Um, this is a type of video that I wish I would have stumbled across if I was just getting into trading. So I'm going to show you guys the things that. So the big thing that I use, the big strategy that I use is supply and demand, support and resistance, and I trade the price action. I only trade the price action. So when you're looking to trade, you have to have a plan. You have to have a plan. You can't blindly enter trades. Like you cannot. Like you can't just go just place a trade and just pray and hope that it makes money. You can't do that. You will lose a ton of money like that. You don't want to do that. So I'm going to show you guys the things you need to look for in order to have a bigger edge and less risk, as the less risk as possible. And I already have I'm going to show you guys the charts. I'm going to show you guys the SPY chart. That's the mainly thing I trade. I'm going to show you guys how I set my charts up, the things that I look for. And yeah. All right, so look. So the first thing I do, I'm coming into the market. The market isn't open yet. So what I would do is, first thing I do, I look at the day. I come here, I go to the day time frame. So as you can see, I already have like some lines and stuff drew on my chart. So I'm gonna explain to you guys what those lines are and why I have those lines placed where they're placed. So coming here, as you can see, first thing I would do, I would come here, come to the day time frame, and I will look and see what's setting up on the daytime frame. So as you can see, the SPY, we're currently sitting around 488, and the previous high was I'm not looking at this candlestick right here. I'm looking at this massive like bearish candlestick. So right here where you see this green line, that was the previous high. That's the all-time high. The SPY just made an all-time high. So I put a line here representing the all-time high. This is the all-time high, and then it reached here and then it pulled back down. So I placed the line right here indicating that this is the all-time high. And then like once I come from the day time frame, I see how the market is forming, what looks to be the trend. So as you can see right here, the trend is very bullish. It's a very bullish trend right here. Very bullish trend right here. But yeah, from there I work my way down to the 35 and sometimes the 1 minute. But I mainly work on these 3 time intervals: the day, 30 minutes, and the 5 minute with the 30 minute. So this is more clear. As you can see, I got this right here for resistance. Every time the price comes back up to this point, it rejects, because this is the all-time high. So every time it came back to that all-time high, it pulled right back down. It didn't break all-time highs um until right here. It broke the all-time high, but then it pulled back down. So which means it still approached around this area and then still had a pullback. So as you can see, it broke the resistance. Once it broke the resistance, it gapped up from the previous day. It broke the resistance, right? And that resistance became support. So every time the price came back to this area, it came back up, because this, once a resistance level breaks, it becomes support. So once it broke this level, it became support. As we can see that here, it gapped up. Once it gapped up, it made a all-time high, and then when it made that all-time high, it pulled right back down to that support what was previously resistance. So it came right back down to this level and went right back up to where the all-time high was. It didn't go exactly right back up, but it attempted to go back up to that area when it gapped up right here. Every time something gaps up, right, it tends to do a gap close, like a gap close. We can see it here. It gapped up. That day, it attempted to come right back down and close this gap once it gapped up to close this gap right here, right? And I believe I got in the trade around here once it came back up to this resistance, knowing that it was going to pull right back down because this was resistance. Every time it came to that level, it pulled back down, you know, because when it first came to this level, we seen it shoot right down here. So my thought process was, when it comes right back up to this resistance, it's going to come right back down. So I will enter the trade in this price point right here. I will enter the trade in this price point right here. Once I get in the trade, I ride it down, have a stop loss put. So I'm going to show you guys right here. When I would place a trade, I'll place it something like this, place the trade, right? Move my take profit down here, stop loss, like right about there, right? And then I would just wait, see the confirmation, see if my thought process was correct, see if everything is going in my favor, which it did. The price, once I got in at this point, this is when I would flip to like the 5-minute time frame. Because once it got to that point, once I place my trade with the 30, I come to the 5-minute time frame to see what the price is doing in a 5-minute time frame. So in a 5-minute time frame, I was seeing bearish confirmation that the price was attempting to come back down. So yeah, I got in around this point right here. As soon when it hit my resistance level, that's when I got in. So I got in right here, right? So we can see right here, it formed a bearish candlestick right here. A bearish candlestick right here. So I'm like, oh, I'm good. I know it's reacting to the resistance, really bearish. And then it started breaking down. It broke down and broke down. And then it came back up to the resistance, made another bearish candlestick right there. So I'm like, I'm good. So I'm holding in trade. Comes right back up to the resistance, bearish candlestick, comes up. So it's only a matter of time before it breaks down. So it broke down right here, broke down. And I get out, like I said, I get out when the price breaks down, comes to a good position, take profit. Took profit like right around here. The stock breaks all the way down. Once it breaks down, bang, I'm out the trade. Resistance, this is resistance right here. Once you get out the trade, bang, you're good. And then you can play it on the flip side as well. When the stock approaches this support, well, this support area right here, you could look to buy calls right here, because as we can see in the past, it came down to this previous support area and came and just shot up the next day from that support area, right from that support area. So those are my tips and tricks on when you should enter a trade, how to trade support and resistance and price action. If anybody got any questions, leave them down in the comment section, and make sure you guys like and subscribe.